I found an indicator combination on TradingView that never misses a profitable trade. With this secret strategy, you'll be able to always follow the trend and enter the market with ultra-accurate timing. Check out this recent 100% Solana price increase that was predicted perfectly by the indicators. Another 25% potential gain could have been yours if you followed this signal. In this beginner-friendly tutorial, I will teach you how to use these indicators correctly, as well as give you a full trading strategy with them that is guaranteed to make you a consistent profit. It's worth mentioning that these technical analysis tools can be used for trading cryptocurrencies, stocks, forex, and options. The most suitable time frames are 15 and 30 minutes, 1 hour, and 4 hours. To install the first indicator on the chart, head over to TradingView and open any market. Currently, I am viewing the Solana price on the 15-minute chart. Open the indicators and search for trend lines, JD by Dyke. Here's the indicator you need. Trend lines. JD indicator on TradingView is a technical analysis tool designed to automatically detect and draw trend lines on a trading chart. This tool typically works by identifying significant price points, like highs and lows, and connecting them to form trend lines. These lines represent key levels of support and resistance in the market. The breakout component of the indicator comes into play when the price of an asset breaks through these trend lines. A breakout is usually considered a significant event, as it might indicate a potential change in the market trend, either a reversal or a strong continuation of the current trend. When a breakout occurs, the indicator might highlight these moments with visual cues, such as colored circles, arrows, or alerts. This helps traders quickly identify these crucial events and potentially make timely trading decisions based on the breakout from established trend lines. The effectiveness of this tool depends on the algorithm used to draw the trend lines and the sensitivity settings for detecting breakouts. I find that this tool works particularly well for long trades. Let's take a look at these recent bullish breakouts. You can see for yourself that these buy signals have really high accuracy. You don't get signals too often, but when you do, the chances of them being profitable are high. This indicator can also work great for buy and hold strategies where you buy the dip and wait for the price to hit your target. To make the indicator more or less sensitive, you can open the inputs and adjust these parameters. For example, I like to set the look-back length pivot number to 20. This way, the indicator draws trend lines more precisely. The next step is to limit the extension lines to 1. We will also need to disable these trend line breakout signals. Instead, we'll use the signals from the second indicator. This pro indicator is called Algo V10. I will leave its link in the video description. In default mode, the indicator comes with buy and sell signals, support and resistance levels, and golden pockets. A golden pocket is a Fibonacci 0.618 ratio automatically drawn on the chart. In the indicator inputs, you can customize the sensitivity of these buy and sell alerts. Set this number to 3. The next step is to hide support and resistance from the current time frame. Instead, we'll enable SR levels from 4-hour time frame. The quantity of levels should be set to 4. Scroll down and disable the golden pockets. For this setup, we'll need to enable the trend dashboard. Once you're finished, click OK. To understand the logic behind this trading strategy, we need to learn the following key principles about price action. In an uptrend, the price doesn't move straight. It makes higher highs and higher lows. You see, prices are influenced by changes in supply and demand. In a rising market, for instance, buyers might start taking profits, increasing the supply and potentially causing temporary drops in prices, even within an overall uptrend. These temporary price drops do not affect the trend if the current drop is higher than the previous drop. A trend shift may occur only in the case when market starts making lower lows. In order to make sure we buy in an uptrend, 2 conditions must be met. The first condition is to have a purple trend line connecting previous lows. There must be no green trend lines above the price, signaling lower highs. The second condition is a positive trend on the dashboard. This multi-time frame trend dashboard shows the current market state in all time frames. Having this indicator on the chart is very useful as it saves a lot of time. You can instantly see the overall market bias. If the trend is positive in the majority of time frames and the market makes higher lows, it's time to further analyze price action. This strategy aims to open the trade at the perfect timing. That's why, when going long, we need to ensure we buy the dip, not the peak. So, buying at the trend line retest is your best bet. Once a buy alert is given, check supply and demand levels. If the price is near a supply zone, it's a wise idea to wait for a breakout. You can buy the security as soon as the price breaks above resistance, which eventually becomes new support. With this type of strategy, you will become better than 90% of traders out there. Let me demonstrate one more long trade example. Here, we see a new trend line connecting higher lows. The market bias on all time frames is positive. This gives us confidence in our stock purchase. The price pulled back to the trend line as some buyers took partial profits. The indicator then issued a buy alert. We check supply and demand. No resistance at the current price. A long position is opened at the close of the price bar. The stop loss is set below the trend line. The profit target is 2 times the risk. This strategy also works well for short trades. When selling, first ensure the market is trending downwards. Check the trend line that connects lower highs. Look at the dashboard. Make sure you sell only if the bias is negative. Once a sell alert is given, check supply and demand levels. In this case, there is no demand level around the price we want to sell the security at. Remember to sell at the trend line. It is too late to open a trade if the price is too far away from the trend line. Set the stop loss above the trend line. Target 2 times the risk. Let's see how this trade plays out. Here's one more trade example for going short. This is a 4-hour time frame. Since we use a higher time frame, the support and resistance levels should be 1 time frame higher. In this case, daily SR levels are enabled. So first of all, we check the overall market bias. We see that a downward trend line connects lower highs. The trend dashboard shows negative trend on all time frames. The price retraced to the trend line and a sell alert was issued. Even though the demand level is quite close to the entry price, there is still some potential profit to be made. We open a short position and set the stop loss slightly above the trend line. Let's see if our technical analysis was right. Traders, I'm happy to share these indicators with you. Be sure to backtest this or any other trading strategy you find on Magic Indicator Strategies. Thanks for watching. Till next time.